You could owe the government tens of thousands of dollars and not even know it. This is a reality for many who drive for companies like Uber and DoorDash. These drivers are independent contractors, not employees. No employer withholds taxes. They are responsible for their own taxes, including self-employment tax. This tax is 15.3%. It covers Social Security at 12.4% and Medicare at 2.9%. This tax applies to net earnings. Social Security tax has an annual cap of $168,600 for 2024. Earnings above this are not subject to Social Security tax. Medicare tax has no earnings cap. Every net self-employment dollar is subject to the 2.9% Medicare tax. Many drivers earn over $600 yearly. They receive a Form 1099 NEC or a Form 1099K. Even without forms, all income must be reported to the IRS. Estimated taxes are critical for contractors. These must be paid quarterly. 4 payment deadlines exist, typically April 15th, June 15th, September 15th, and January 15th. If dates fall on a weekend, the deadline shifts. Failing to pay on time or underpaying leads to penalties and interest. Many expenses can be deducted, reducing taxable income. Mileage is often the largest deduction. For 2024, the standard mileage rate is 67 cents per mile. A driver logging 15,000 business miles could deduct $10,050. This significantly lowers their tax bill. Other vehicle deductions include gas oil changes and repairs. Car insurance can be deductible if the vehicle is primarily for business. Car washes and tires are also included. Phone and internet bills are deductible proportional to business use. 80% business use means 80% of the bill is deductible. Hot bags, car chargers, and floor mats are small but important deductions. A home office deduction is possible if a specific area is exclusively and regularly used for administrative tasks. Use the simplified method, allowing $5 per square foot up to 300 square feet for a maximum $1,500 deduction. Tax preparation fees are deductible. Tolls and parking fees for business are 100% deductible. Keeping meticulous records is essential. A detailed mileage log for every business trip is vital. Receipts for all business expenses must be saved. Bank statements showing business transactions are critical. A separate bank account for business income and expenses simplifies record keeping. Drivers file a Schedule C profit or loss from business with their Form 1040. This form details gross income and expenses, calculating net self-employment income. Many tax software programs assist with calculations. Understanding underlying principles is crucial. The gig economy creates unique tax complexities. Many new drivers neglect estimated taxes. This often results in a massive unexpected tax bill and penalties in April. Seeking advice from a qualified tax professional is a wise investment. They navigate self-employment tax rules. Whether driving part-time or full-time, the same tax rules still apply. Efficient mileage tracking is paramount. Without proper logs, valuable deductions are lost. Smartphone apps costing around $60 yearly can track mileage, automatically saving hundreds. Drivers use personal or leased cars. Lease payments can be deductible. Annual insurance costs exceed $2,000. Vehicle maintenance surpasses $1,000 annually. New tires cost $600 every 2 years. Gas expenses exceed $300 monthly for active drivers. These cumulative expenses pile up quickly. Treating your driving as a formal business is key. An EIN is optional but can formalize finances. Many gig workers do not grasp they are operating a small business. The IRS mandates quarterly estimated tax payments if you expect to owe at least $1,000 in tax. This threshold is easily met by most gig drivers. Ignoring requirements leads to severe penalties and interest. The penalty for underpayment is 0.5% per month up to 25% of unpaid tax. State income taxes are another important consideration. Each state has own tax laws and rates. California has rates reaching 9.3%. Texas has no state income tax. Understanding your state's tax landscape is vital. Local income taxes may also apply. Philadelphia has a 3.75% wage tax. The tax burden is not solely federal. Retirement planning is a significant benefit for independent contractors. Contribute to a SEP IRA or solo 401k. These contributions are tax deductible. They reduce taxable income and help save for retirement. A SEP IRA allows contributions up to 25% of net earnings. The maximum for 2024 is $69,000. This is a powerful tax-saving opportunity many miss. Self-employed health insurance premiums can be deducted from gross income. This lowers adjusted gross income for further tax savings. Another valuable deduction often overlooked. Retain all tax-related documents for at least 3 years. The IRS generally has 3 years to audit. Substantial understatement of income extends this to 6 years. Accurate record keeping is your best defense. Misclassifying personal expenses as business expenses is a common pitfall. Only the business portion of an expense is deductible. If your car is 50% business, 50% personal, then 50% of car expenses are deductible. This distinction is crucial. The IRS differentiates business from hobby. If you expect profit in 3 out of 5 years, it is a business, otherwise a hobby. Hobby income is taxable, but expenses are generally not deductible. This classification is important. It is not all negative, though. Numerous legitimate deductions substantially reduce taxable income. This makes gig work financially sustainable and profitable, but only if you diligently learn and apply tax rules. Many free resources are online. IRS.gov offers publications for self-employed individuals. Publication 505 covers estimated tax. Publication 529 details miscellaneous deductions. These are detailed and informative. Many online communities and YouTube channels offer advice. Always cross-reference with official IRS guidance or a certified tax professional. The gig economy expands rapidly. 70 million Americans freelanced in 2023, projected to reach 90 million by 2028. These tax regulations impact a massive segment. Do not be caught unprepared. Ignorance of the law offers no exemption from penalties. Plan your taxes from day one of gig. Every dollar earned is taxable income. Every business-related dollar spent is a potential deduction. Success often hinges critically on effective tax management. Many drivers fail to grasp this reality. Do not make that mistake. Understand your responsibilities and maximize your financial rewards.